And welcome to World of Business, your weekly updates into trending news and latest developments on the stock markets. It's also here we herald unsung but thriving business entrepreneurs. And on this episode, we explore how Zimbabwe's 2026 national budget priorities are being shaped by discussions at the recently concluded pre-budget seminar held in Bulawayo. We will discuss this in detail in the second segment, but we give you the exchange rates as of recently. The Zimbabwe gold to the United States dollar interbank rate was at 26.34 ZiG. The Zimbabwe gold to the Great Britain pound interbank rate was at 34.64 ZiG. The Zimbabwe gold to the euro interbank rate was at 30.56 ZiG. The Zimbabwe gold to the South African rand interbank rate was at 0.64 ZiG. The Zimbabwe gold to the Botswana pula interbank rate was at 1.86 ZiG. We also give you your commodity prices on the global market. Gold per ounce traded at $4,093 after it went up by 0.67 percentage points. Silver per ounce traded at $51.95 after it went up by 1.56 percentage points. Copper per pound traded at $506.15 after it went up by 0.21 percentage points. Platinum per ounce traded at $1,548 after it went up by 1.08 percentage points. Do stay tuned for the second segment here on World of Business, only on ZBC. Welcome back to the second segment of World of Business. I'm joined in the studio by Mr. Tinotenda Kambasha, Chief Executive Officer of the National Venture Capital Company of Zimbabwe. I'm also joined by Mr. Persistence Gwanyanya, who is quite a regular on the show, to give us and help us unpack on this topic today. Now, gentlemen, welcome to the show.
Thank you for having us.
Now, let's begin with the main takeaways from the pre-budget seminar. Lawmakers, ministers and economists came together in Bulawayo to discuss the fiscal priorities for the 2026. What stood out and how these discussions set the tone for the budget process from your experience?
Thank you. The 2026 budget is the first budget preceding the implementation of vision or for NDS 2. So it is a budget which we expect to carry the measures as we transition to NDS 2. But NDS 2 itself is the second developmental aspect of Vision 2030, and it precedes NDS 1. And this NDS 2 talks mainly about how do we consolidate the gains from Transitional Stabilization Program, which was mainly speaking about stability, NDS 1, which was mainly speaking about growth and sustaining that stability. And then NDS 2, which largely speaks to the quality of life, how growth and stability delivers a quality of life for a typical upper middle income class. So yes, we are getting into the mode of transforming the lives, delivering the warfare that NDS 2 or Vision 2030 6.2. So it's I
have a question there, Mr. Gwanyanya. The NDS2 that you're mentioning, when is it being implemented? NDS1, is it the phase run out yet?
NDS2 is supposed to run from 2026 to 2030. That is the 5-year period for NDS2. And this NDS2, as I have indicated, is the last developmental party of the Vision 2030. So all those that we aspire as a country to achieve are expected to be realized by 2030. What do we aspire to be? We aspire to be an upper middle income class economy. We have done quite a significant and notable progress in respect of growth and GDP, because you can't talk of the quality of life before you talk about the growth. It's the growth that delivers that quality of life. The economy has been growing at an average of 6.3% outside South drought for the last 7 years. The economy, yes, it has been struggling, but seems to now have come back on course in respect of stability. And you want that to be consolidated into the quality of life. And we expect budget 2026 budget to speak about that consolidation, to speak about the social service delivery, to speak about the equality, wealth distribution, to speak about all other aspects that
let me circle back to you, Mr. Gwanyanya. Mr. Kambasha, quick question. What were the major themes that emerged from the pre-budget seminar, and why are they significant for the budget formulation, the 2026 budget formulation?
I think my good brother has covered quite a lot of that. But what we're seeing is the macroeconomic side of things. So initially we had seen in the TSP and NDS1 that we were trying to have that stable environment, and we can't grow the nation without there being an environment that helps people invest in businesses, that helps them grow their businesses, therefore creating more employment. And then going back to what my brother said, that's how you get an upper middle income society, is by that growth. So I think the key takeaways were increasing the resource base for tax, and you do that again by enabling companies to grow further. I also took away quite a lot to do with the local companies doing most of the local jobs, whether it's roads, dams, and so forth. Again, coming back to jobs and so forth. And then I think now what we need to see into NDS2, which was quite pronounced, was the inclusion of the private sector. And His Excellency has made it very clear that he wants a private sector-led economy, which crowds in also other money that is not from Treasury only. So, and then if companies do grow, then our tax base also grows. We also saw fiscal discipline. It was quite pronounced in these discussions. And we saw that is the way that we're going to be growing our tax base, reducing our costs. And that's going to be the new story of growth and innovation into NDS2.
All right. Now, talking about collaboration, especially between Parliament and Ministry, how important is this collaboration in shaping the realistic and growth-oriented budget priorities?
So the Parliament gets the mandate from the people, right? So the parliamentarians, the portfolio committees, are the ones that interact with the people on a day-to-day basis. And they oversee the ministries as well, in terms of the portfolio committees. So instead of just the Ministry of Finance coming up with the budget by itself, it is now being driven by the actual people who gave them the mandate. So that link between Parliament and Ministry of Finance as a collaboration in consulting is very key in giving us a balanced budget for 2026 that allocates resources to where they're supposed to be.
All right, that's interesting. Now, Mr. Gwanyanya, based on the discussions, what signals are being sent to the private sector and investors about the direction of economic policy in 2026?
I think the future is for the private sector to claim. As the government, the economy is transitioned towards a private sector led economy. Currently or previously, the economy was driven largely by the public sector, that is the government. The government is estimated to command more than 70% of the market power. And you want that position to be reversed as we foster private sector growth. The role of government is envisaged in Vision 2030 as that of creating an enabling environment for business or private sector participants to thrive. And this enabling environment speaks to the ease of doing business, which is quite key as it relates to our situation currently in the country, but also the cost of doing business, which to a greater extent and arguably has largely driven the informality in the economy. And those issues, as you are seeing already, are being revisited. The government is coming up with measures to improve the ease of doing business. We have been talking in this studio about the measures relating to the regulatory fees and the regulations themselves, which are being revised. We have also been talking about the other interventions by the government, including the taxes and the duties and all the fiscal regime that the government has been coming up with. And all those are in the spirit of improving the business environment for the private sector to participate. Now, Zimbabwe is a resource-rich economy. It is these resources that are creating opportunities, which government is pointing the private sector towards to exploit and grow the economy up the value chain.
All right. Growing the economy up the value chain. Now, the 2026 budget is likely to reflect continued emphasis on stability, infrastructure investment, and private sector participation, like what is being said in this discussion. Themes that underscore Zimbabwe's developmental agenda. Join us in the last segment. We have more to unpack. Now, welcome back to the final segment of World of Business. I'm still joined by Mr. Tinotenda Kambasha and Mr. Persistence Gwanyanya. And we turn now to how these emerging themes could influence the business and investment landscape. Now, Mr. Kambasha, the seminar placed strong emphasis on domestic resource mobilization. How can businesses position themselves to take advantage of this?
I think a country grows by its own resources. And what we need to do is to focus on the local resources that we have. So you'd find that there is quite a lot of money, whether it's in the pension funds or in businesses. And what we need now to do, what we're trying to do with NDS2, is to create an environment that enables businesses to thrive. And you do that by giving them, like we were discussing earlier, ease of doing business, taxes, incentives. Actually, sometimes it's better for government to play the back seat and allow businesses to thrive. So I think we're going to be seeing more of that as we enter NDS2, more of the growth, more of them participating in the private sector, and that's what's going to be the backbone of the economy.
All right. Now, Mr. Gwanyanya, what balance do you expect government to strike between economic growth and social welfare spending in the 2026 budget?
Economics is all about trade-offs, but also prioritization and sequencing.
All right.
We have been focusing more on stability and growth as I have indicated. But as we wind up, we want that to translate into the quality of life, which may mean some measure of trade-off, that the focus and emphasis now should be more on the quality of life, which speaks to social service delivery, your health, education, but also other social services to the generality of the people. But it also speaks to how that growth is shared, but which is also an issue that the Vision 2030 itself places emphasis, that the wealth has to be shared equally amongst the population. So it speaks to the sharing of the wealth. I've already indicated that we have done significant progress so far in respect of growth. The economy has grown by an average of 6.3%. And that growth is able to deliver the quality of life at this rate. If we continue at this rate or even accelerate the growth, we're able to deliver the quality of life and build the foundation that we need to, one, sustain stability, and two, to then deliver the social services that the economy needs to grow the quality of life.
All right. Now, Mr. Kambasha, governance and accountability were recurring themes. How do they enhance fiscal discipline and public trust in the budget process?
I think that social trust is the key thing, and how you redevelop that. And we've seen this. You stabilize the economy and you become transparent. So we've seen the exchange rate stability for the majority of this year. So I think we fixed that side of things. We have also seen austerity measures from the finance ministry, quite a lot, because I'm under Ministry of Finance, so trust me, a lot of things were cut. So you're seeing both sides of stability of the currency, and then you're seeing cutting of expenses that aren't really helping government grow. And that money then gets channeled to the areas that it's supposed to be, whether it's going to build hospitals, roads, dams, schools, like we've seen,
etc.
schools, etc. And we've seen quite a lot of this. I mean, currently we're actually investing with a new investor who just came through, Dangote, today. And they're looking at power, mining. So these are all mega, huge projects. And government can now channel part of its resource or its portion to those projects. Then again, going back to the social life that we're trying to create, growing the economy, a better outcome for everyone.
All right. Now, finally, what message does the seminar send about Zimbabwe's long-term policy direction and its commitment to inclusive national development? Both of you can actually chip in on this one, starting with Mr. Gwanyanya.
Yeah, it sends a clear message that the government is determined to transform the lives of the people. We have embarked on a 12-and-a-quarter reform agenda, and we are still in the process of reforming, and we are winding up these reforms. And we are seeing the real changes, real transformation happening, starting from the fiscal side, fiscal reforms, the monetary side, we're seeing the monetary reforms, but also other non-monetary and fiscal reforms that we are seeing that are going to support the upper middle income class, a shared prosperity and prosperity in this economy. So what I can say is we are seeing a government, we are seeing policymakers that are more determined to achieve what the reforms speak about.
All right, Mr. Kambasha.
Yeah, I totally agree with my brother. I think it's very clear what direction we're going in. I think that this budget is going to be quite a gutsy one. I think the country is taking a huge leap forward in terms of innovation, in terms of industrialization. You're going to see that a lot. Industrialization, innovation, growth, retooling, re-engineering, coming up with Zimbabwean solutions by Zimbabweans, whether they're financial instruments, whether they're actual physical stuff. We've seen now Education 5.0.
Yes.
It's now actually making us focus on what's good for us by us. So the direction of India's too is very, very strong. So the beginning of it is the budget, but that's the first step in the next 5 years. And I think it's going to be quite an exciting time.
It's going to be quite an exciting time. Now, as we've heard, the 2026 budget will not only aim to strengthen the economy, but also to enhance livelihoods, promote good governance, and build a shared vision for prosperity. Now, until next time, my name is Tafaranda Guta. From myself and the crew behind the scenes, it's back to business.